please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello, good morning and welcome. You're watching Power Breakfast on CNBC TV18. I'm Mangla Malu. With me is Ekta Batra. Good morning, Ekta. Last evening we got some not so happy data coming in from the IMF. They've cut India's growth forecast by 50 basis points while they have increased the world GDP growth forecast by 10 basis points. We'll keep an eye out on that. But the markets, they're throwing caution to the wind. The SGX Nifty indicates a strong start.
Yes, absolutely. But let's get going in terms of the top stories that we're tracking. US markets end at record highs. Walmart surges on the back of its $20 billion buyback. And it sparks a rally in consumer stocks. Asian markets extend the global cheer.
International Monetary Fund hands a sharp 50 basis point cut to India's growth forecast for this financial year. Expect GDP to be 6.7%. Also cuts growth forecast for FY19 by 30 basis points.
Well, 100 days after the landmark rollout, the government says that sales have been compensated for 2 months and there's still a surplus in the compensation fund. Says the process of refunds to exporters for both July and August will begin within the next 10 days. But the Revenue Secretary has written to 21 state GST commissioners to assess the missing gap in filings.
India's biggest reinsurer will kick off country's third biggest IPO today. The $1.7 billion IPO opens with a price band of 855 to 912 rupees per share. Right, first up, let's take a look at the Asian markets, mostly in the green, extending the rally that the Wall Street took, taking cues from the signs of confidence in the US. The Dow yesterday, remember, hit record highs. The euro firmed up after Catalonia held back on the outright declaration of independence as well. So the Nikkei, that one is mildly underperforming, primarily because of the strength that we're seeing in the yen and a lot of underperformance from the Japanese exporters, the likes of Toyota and others. One stock that stands out in the Nikkei is Kobe Steel. That one was down 16% as after the company admitted to falsifying some data. The Korean market's up nearly 0.6%, extending the cheer that we saw on the Wall Street. If you take a look at the other indices as well, primarily in the green, the Taiwanese index up 10% after being shut yesterday, and the SGX Nifty, that one should come up for you. Remember, yesterday the Nifty held the 10,000 mark. The SGX Nifty indicates that we will go higher and hit nearly that 10,050 mark.
Okay, well, let's tell you what happened on Wall Street then. US markets rose to record highs. The Dow Jones hit intraday as well as closing record highs, rising almost 70 points. Walmart contributed the most to the gains on the back of a large buyback. Meanwhile, the Nasdaq and the S&P 500 hit intraday highs but failed to hold on to those gains by close, though it ended in positive territory. CNBC's Josh Lipton gets us a wrap of all what took place on Wall Street.
U.S. markets finishing higher on the day, the Dow adding on 69 points, the S&P up by 5, and the Nasdaq higher by 7. Optimism among small business owners declining in September, due in part to the major hurricanes that devastated parts of Texas and Florida. The National Federation of Independent Businesses Small Business Optimism Index fell over 2 points from August, with the storms dampening sales and expansion plans at many mom-and-pop shops. Meanwhile, the huge conglomerate Honeywell unveiling a corporate makeover strategy today, saying it will spin off its home products and transportation systems units into 2 standalone publicly traded businesses. Aerospace technology consequently becoming the company's primary pursuit as it trims its product portfolio from one that also contained burglar alarms and fishing boats. And finally, Apple is making more moves in original programming. Sources confirm that the company has now signed a deal with Steven Spielberg's Amblin Partners and Comcast NBC Universal. The deal calls for 10 episodes of Spielberg's old sci-fi show that ran in the 1980s called Amazing Stories. Spielberg could executive produce it. Comcast is the parent company of this network. That's the action from the U.S. market. You have a good trading day in India. Back to Mumbai.
Okay, thank you very much for that. But what is the road ahead for the US markets? How long will this record rally sustain? Let's get in some global opinion.
We are coming out of the period of low volatility and low rates. This time around, I do think we also have some concerns about market liquidity. So basically, we are thinking that next year investors should be a bit careful. And this year we're quite positive. We have earnings ahead of us, which we think are going to be pretty good. We have a promise of this tax reform, so we're overall positive. But we are watching for some warning signs for the next year.
What's the principal concern that we have would be idea of higher rates. The idea of the Fed looking to raise rates between now and the end of 2018. Goldman Sachs economists looking for 5 hikes. The market's pricing in 1 to 2 hikes. We think about the risk of higher interest rates as a headwind to valuation.
All right, then in Europe, markets ended mixed as the Catalonian crisis dragged on sentiment. Spain's IBEX, that one pared some of its sharp losses. At one point, it was down 1.5%, but despite that, closed with a 0.9% downtick. That is the Spanish index. If you take a look at the frontline 3 indices, the FTSE, that one ended mildly in the green. The German index underperformed primarily because the auto packs, namely Porsche, you had the likes of Volkswagen and Daimler as well. All of them underperformed. The French index absolutely flat, helped by a couple of luxury companies. Like LVMH reported a good set of numbers, because of which we got Dior and Burberry, which also gained. But Catalonia, that one really stands out. It put independence on hold. Catalonia's president said the suspension is an effort to de-escalate the situation, while he seeks talks with the Spanish government. CNBC's William Marks, he sent us this report.
Carles Puigdemont, the Catalan leader, speaking to the assembly behind me a couple of hours ago, he said that although he'd been given a mandate to declare Catalonia an independent state, he asked for patience. He asked for the assembly behind me to give him some time to pursue international leads. We saw thousands of people on the streets over the course of the day here and hundreds of police officers outside of the building. But when he stood to spoke, the entire chamber turned silent. He said that we're not criminals, we're not crazy, we're not staging a coup, we've not been indoctrinated, we're normal people asking to vote and asking for dialogue in agreement with the Spanish government. He said he had nothing against the people of Spain. He's asked for international mediation. Whether that will happen or not, it's not clear. It's also not clear what the government response is going to be to this, whether they will indeed try to still suspend Catalonian autonomy, send in the army, and try and take charge of this assembly behind me. But right now, it sounds like the Catalans are looking for mediation in this process.
Okay, but let's shift focus now to other asset classes and news from the dollar. So the dollar index has continued to weaken, pressured by a resurgence of geopolitical tensions with North Korea. The euro has hit a one-week peak as Germany has raked up its best month for exports in a year in August, and expectations grew that the European Central Bank may in fact consider scaling back its asset purchases.
In the world of commodities, crude oil prices were stable, with the US crude holding above $50 per barrel after rising 2% the previous day, on signs that markets are gradually tightening after years of oversupply.
And from precious metals, we have gold, which has risen for a 4th straight day. This is after hitting a near 2-week high in the previous session, supported by weakness in the US dollar. Well, the International Monetary Fund, or the IMF, has pared its growth forecast for India, citing the lingering impact of demonetisation and disruption caused by the goods and services tax. The IMF expects India to grow at 6.7% in FY18. That's a downward revision of 50 basis points from its earlier projection. Ritu Singh, who has gone through the report cover to cover, joins us now with all of the details. Ritu, over to you.
Let me start with India first, where it seems like a disappointment of sorts because the IMF has now cut India's growth forecast sharply by 50 basis points, in fact, for FY18 to 6.7% compared to 7.2% earlier. For FY19 as well, the growth has been downgraded by 30 basis points to 7.4%. Now, what is the reason for India slowing down growth? The IMF says that the lingering impact of demonetisation has impacted the numbers. And the second thing is that it is also a reflection of the uncertainty regarding the introduction of goods and services tax. So these are the two reasons why growth has been slow. But what could boost growth from here on? It says structural reforms from the government, including the likes of the goods and services tax implementation over the medium term, could in fact take India's growth to over 8% levels. So what are the key requirements to boost India's growth? Number one, easier labour market regulations, and number two, easier land acquisition procedures will help India become a better place in terms of doing business. business. On the global front, what the IMF really had to say is good news. For 2017, growth has been revised upwards by 10 basis points to 3.6% and for 2018 to 3.7%. But the IMF adds that this recovery is not complete. There is still a long way to go and there is some short-term pain and risks attached. But all in all, good news on the global front. But on as far as India is concerned, some pain lies in store.
All right, some pain lies in store as far as India is concerned, but let's take a look at what's taking place with the GST. It's been 100 days since the rollout of the landmark goods and services tax. India incorporated, making the transition to the new indirect tax landscape. There have been many tweaks by the GST Council on tax rates and to ease the compliance burden on small businesses. The government says more will follow. Take a look at these numbers. Only 73% have complied with return filing for July. The initial deadline to file returns for July was the 10th of August. This was extended by 2 months to the 10th of October. But even then, we have just 73% compliance so far. In Maharashtra, which accounts for 13% of the total registered assesses, nearly 79% have filed their returns for July.
Okay, well, the government is standing firm. The clear message to people is that there will be no extension for GST return filing this time. Revenue Secretary Hasmukh Adhia has written to GST commissioners in 21 states asking them to conduct a survey among those who haven't filed their returns to find out what's hampering the process. Okay, well, here is the CBEC member in charge of GST, Mahindra Singh, on rollout has progressed so far.
We think about 40% of the taxpayers are filing nil returns. So maybe smaller taxpayers who actually are not transacting any business during this period and they have to file nil return. Maybe they are hesitant, maybe they are IT related issues, but we are in the midst of conducting this survey. Our field officers throughout the country are conducting these surveys. They are trying to contact the taxpayers, what are the real reasons, but preliminary estimate is that I think they have not done any business and they are filing nil return, and in view of the difficulty in filing returns regarding the IT related issues, so that must be the reason, but revenue is not likely to be affected much. The government of India has promised that revenue shortfall of the states will be compensated by way of compensation cess. I don't have exact figures with me, but I can assure you the compensation cess which was collected during the first 2 months was more than enough to compensate for the revenue loss of the states. Revenue loss of the states for the month of July and August has been distributed.
All right, that's not all. We also spoke with some state finance ministers to take stock of all the compliance issues and how the rollout has been so far. Listen in to what they had to say.
One of the key issues that is facing the compliance is the fact that we should all accept that there have been tax evasive accounting pre-GST. Transactions in cash have been going on historically, and under GST it doesn't make any sense, or it's not profitable to do transactions in cash, because then you lose the input tax credit. The whole retrospective tax inquiry, I think, has been a major deterrent for compliance and registrations. One thing, of course, that will happen is that the 28% bracket will be trimmed down. There's no denying that. I think it will come down, but eventually it has to be it can't be a 2-rate structure. Whenever it happens, it has to be a 3-rate structure in terms of the main GST rates, which will come out of collapsing 14 and 12 and 18, which is like 14.5, somewhere there. And then you will have the merit good rate of 5% and a demerit rate of 28%. So it will be a 3-band which is globally accepted. So the idea really at this point of time, even if we don't collapse the rates, would be to increase the 12-18 bracket and reduce the 28% bracket, which is causing a lot of concern.
For the small suppliers, for traders and manufacturers, the demand for compliance is compulsory. They are not used to it. In fact, GST Council accepted that by saying they need to give only quarterly returns, payment quarterly, and so on. Why? It's a recognition of the fact that for small dealers there is a real problem over there. So that is something that has to be kept in mind. Still there would be problems. So suppose 40% of the suppliers give nil return, 30% do not. So that means something like 70% of the entire registered GST and suppliers. There is some problem.
Back home yesterday on Dalal Street, a spike witnessed during the first hour of trade was held on through the trading session by the market for the rest of the session. The Nifty managed to hold on to that 10,000 mark yesterday. The Sensex too ended the day on a good note. Among the broader markets, the mid-caps, they really outperformed. The SGX Nifty indicates that that 10,000 mark is likely to hold and extend a bit. What does today's day have in store for us? Well, Naveen joins us to give us more details. Naveen?
Good morning, Mangalam. I'll begin with SGX Nifty, what you had pointed out. So SGX Nifty is indicating in opening about 10,075. Also, if you see the global markets, Dow has ended at record highs, up almost 0.3%. So in that way, we are getting all positive cues. Getting back to yesterday's trade, as you pointed out, we had seen a spike, and then we were moving around that 30-point range. So that is where the Nifty was moving at. But remember, the closing about 10,000, that has been important, and this has been the highest, first time 10,000 above closing maybe in this October series itself. In fact, I think since September 22, this has been the first closing above 10,000. So that is one key important point to note. Also, talking about the levels, 10,000 call, that has been seen a lot of writing, and that has been seeing a premium of close to 9,900 rupees. So 10,100 is where the upside, maybe there will be some resistance at the upside. Talking about the support levels, the 20-day moving average as well as 50-day moving average remains impact. Remember two key numbers, that is 20-day moving average of 9,977. Meanwhile, 50-day moving average at around 9,944. So we will see the support at around 9,950, 9,960 levels. That being said, also there came in some economic data. IMF has in fact cut the GDP guidance for India by close to 50 percentage points. So that has been that is one thing which we'll have to keep an eye on. Also remember, in terms of the flows, the institutional flows, that has been tad bit of negative, almost 100 crores of selling in terms of the institutional flows, net selling, and also the futures premium, that has narrowed a tad bit from 28 points, that has come in at around 18 points. But yeah, the positive point to take home was that 10,000 above a 10,000 closing is what SGX Nifty has been indicating.
And stocks? Stocks,
I'll begin with Axis Bank. CLSA have in fact upgraded the stock from a outperform to buy, and also increased the target price tad bit by almost 20 rupees to 620. The other stocks that will be in focus today, Bodal Chemicals. There was a board meeting wherein the QIP will be considered, and remember, the price is at around 167 rupees. So keep an eye on Bodal Chemicals. Dena Bank also in fact launched its QIP at around 30 rupees. And one more stock, we haven't been talking about that for quite some time, PSP Projects, recently listed stock. But remember, they have got an order of almost 1,500 crore from the Surat Diamond Bros. So comes as a big kicker for that company. On the other hand, Sikal Logistics Board has approved the buying of stake, almost 26% stake that they held in MMTC. On the other hand, Sri Leathers, the board will be meeting for that company on the 14th of October to consider the buyback. So see that stock in action in today's trade. Last but not the least, Roto Pumps. Remember, the pump companies have been buzzing for the last 2 to 3 days on the back of GST news. But today we understand that the company is planning to launch a new range of external gear pumps. So that stock will be in focus on the back of that. Back to you.
All right, Naveen, thanks a lot for that. We'll keep an eye out on all those stocks. Also keep an eye out on a lot of the earnings which are due today, the likes of Lakshmi Vilas Bank, Kirloskar Pneumatic, as well as TV18 broadcast. On that note, we'll...
Well, it's earnings season, and the big question is, will the Nifty see the double-digit earnings in Q2, or will GST and demonetization continue to play spoil sport? Varinder Bansal is here with what we can expect from this earnings season.
Well, thank you so much. The big question clearly is whether the earnings will revive in second quarter or not. Remember, first quarter earnings were hit. Nifty aggregate profitability was down by nearly 11%. And of course, the economy is battling with demonetization, GST and RERA as well. So this time, analysts on the street are, hopeful that Deutsche Bank, of course, if I just can quote them, that the aggregate revenue for Nifty revenue could increase by 8%, EBITDA by nearly 13%, and profitability by nearly 17%. Even if these numbers are achieved, remember the first half earnings for Nifty will be up anywhere between 1 to 2%. So there's a lot to do even in the second half to achieve that double-digit mark, which the analysts expected at the start of this earning at the start of this financial year. So what could lead the rally? Clearly commodities. Commodities will be the one where we'll see huge, upsurge in terms of numbers because of the low base. Energy is the one to watch out for. Metals, they have been strong all throughout, so watch out for that as well. And the private financials are the one. The numbers will come on your screen. How much growth in terms of revenue, EBITDA and profitability it could come. The sectors which could lag are clearly telecom and pharma. Watch out for them. They could be the one which could see more pain, especially telecom in this quarter.
All right, that's not all. In fact, we also had a lot of market experts and their expectations from the second quarter earnings.
We think this quarter, if you get away with something like 450 rupee earnings on the Nifty, it will be a very, very big surprise. I see low single digits. I don't see 7 or 8 being crossed. And we are aware of all the, headwinds which we have. Already you've had 2 companies which are large bellwether which have already warned. So that was HUL on the consumption side and L&T on the capex side, which was telling you that this quarter is maybe a washout for some of them. But more or less, I would expect 450 to be the target, and this quarter could be quite a washout.
If you consider the non-bank and non-oil sector, the earnings growth that we are sort of looking at is close to 9.5%, a top line growth of something like 10.2%. EBITDA is growing at something close to 10%. On the one side, you have a sort of a demand stimulus led by larger government spending. You also would have a scenario where margins will be under pressure because of the increase in raw material prices. So I think in this quarter, since you have a dislocation relating to GST, an inventory built up, inventory run down, all those things have happened. So I don't think this quarter will necessarily replicate or sort of symbolize what will be the trend going forward.
What we are looking at is an IDFC universe growth of about 9% for the whole year, which is about 3% growth for the first half and about 12% growth for the second half. But having said that, this quarter in particular, we will be seeing a 6% growth in Nifty estimates and about a 4% growth in the IDFC universe estimates. Now, having said this, it always masks, these aggregates always mask the outliers and always mask the performing and the non-performing stocks. The commodity-based space is where you will see more upsides, and with the commodity prices staying firm, you will continue to see more upsides in the stocks also relating to this space.
Now let's shift focus to the primary markets. General Insurance Corporation is all set to kick off its mega initial public offer today. This would be India's 3rd biggest IPO and the largest ever public issue by an insurance company. Abhishek is here with more details. Abhishek, how does the issue look?
Good morning, Mangalam. So the issue is actually quite huge, in terms of it has 2 offers. One is offer for sale and one is fresh issue. So approximately the issue size is about 11,400 crores, out of which, about 1,600 odd crores is fresh issue and the rest is offer for sale, wherein the proceeding will go to the government. So price band is 885 to 912. So if you look at the PE valuation, works out to close to 25 PE based on FY17 earnings. Now, what is the highlights of GIC? Now, GIC is generally largely into reinsurance space and has a 60% market share in that. So it is spread across, the segmental reporting is spread across agriculture, fire, motor, health, marine, engineering, etc., so on and so forth. The key highlight being that, it is the 12th largest global reinsurance player and 3rd largest in Asia. Combined ratio is well below 100%, that is at 98.4, and over the last 2 years, that is FY15 to 17, the CAGR in terms of the premium has been at 49%. So let's see how this IPO kicks in. Remember that 2 IPOs, Mass Financial and Godrej Agrovet, already have got in 1.7 lakh crore kind of subscription built in. So let's see how GIC pans out.
Okay, yes, huge IPO coming in today, but thanks Abhishek for that. Moving on, the oil marketing companies are appealing to their dealers not to go on strike on the 13th of October, which was announced last week by the United Petroleum Front. The front is demanding inclusion of petroleum products under GST. However, OMCs, oil marketing companies, say that since dealers are not impacted by the tax regime as they just pass through taxes to the consumer, therefore they need not worry about it. According to oil marketing companies, some dealers are also opposing the penalty on incorrect delivery of petroleum products. OMCs say this demand is unreasonable and hope that petrol pump owners will see reason and won't go on strike.
There is a tendency by the dealers, by some of the dealers, to not deliver the correct quantity. We specifically did not have a provision to cover such things, which we have introduced now. Now means every dealer every day is supposed to check every nozzle that it is delivering correct. And in case it is delivering beyond permissible limits, that it is short delivering beyond permissible limits, then now there is a penalty even if fields are intact. Honest dealers need not fear at all. Why should anybody fear? In case the dealer is delivering correct quantity, no action can be taken, no action shall be taken. As far as dealers are concerned, whether it is VAT or GST, it is passed through them. This is directly going from the customer to the government. Dealers need not worry about whether these products are under VAT or under GST. It is passed through for them. It will continue to be passed through.
All right, let's take that point forward. In fact, Niti Aayog Vice Chairman Rajiv Kumar, he said that petroleum products could actually be bought under GST sooner rather than later. In an exclusive conversation with CNBC TV18's Rituparna Bhuya, Rajiv Kumar also said that the budget could be the best time for inclusion of petroleum products under the GST. Here's an excerpt.
Prime Minister actually made it quite clear that he is he's really prepared, you know, for taking that step, but said that this will happen after the fear of the unknown is removed. And by that, he meant that, you know, the state governments, you know, and who are of course integral member, you know, an important part of the GST and GST Council, you know, are not clear yet as to what will be the impact of bringing these sectors under the GST on their revenues. You know, and as you have seen in the next first 3 months, as greater clarity has come, as states have become a little more confident of what is happening under the GST, they have taken several steps, you know, to ameliorate the difficulties and also perhaps take even a revenue cut, you know, a possible revenue cut, you know, by removing or bringing down the rates, etc. So my feeling is that by the time you have the budget, there'll be far more, you know, clarity on this. And perhaps but the budget could be a time where you might find that these sectors are under, you know, there's active consideration of, you know, bringing them under the GST. Of course, this will have to be decided by the council because there's no other way. And if the GST system is stabilized by that time and this fear of the unknown is kind of, you know, much more diluted, you will see these sectors coming in. But I'm quite convinced that they will be under the GST sooner rather than later.
Okay, well, from the sidelines of the Sera Week India Energy Forum, Anshu Sharma caught up with the new ONGC chairman, Shashi Shankar, on investment plans and outlook going ahead. Here's an excerpt of that conversation.
What are the targets for ONGC in terms of increasing production? There was a meeting with the Prime Minister yesterday. What has ONGC committed from its side?
No, in the Prime Minister's meeting there was no specific targets were discussed. These were all broader issues which concerns the industry, and there were advice from the global leaders. So as such, this meeting was not meant for any specific targets.
So what is the production targets for both oil and gas for ONGC this year?
This year, the exact number if you're talking about, it's about, I'll have to check on this number, so please bear with me. So exact number I'll be able to tell you after referring to the documents.
Do you plan to increase the production this year? Any percentage if you could give?
Yeah, there is going to be an increase in production, especially on the gas front. There is going to be a substantial increase. Oil also there will be increase, marginal increase. And going forward, as we have prepared a document in view of the call given by the Prime Minister of India. And we see a substantial increase in our gas production, and it's going up from present 60 million standard cubic meters to in excess of 100 million standard cubic meters. So, and for which we have already made investment decisions, and projects are at different stages of progressing. So I think hopefully we should be able to.
How's the capex going for ONGC?
Capex, we are one of the few exceptions which has maintained its capex despite this depressed market condition. So we have, though we have kept our capex at the same level in terms of absolute numbers, but in terms of physical program, there has been a substantial increase, because as you know that at this reduced prices, the cost of services have come down. And people are talking about now operational excellence. So efficiency part also, there has been substantial improvement. If I can be a bit specific, last year on drilling front alone, there has been improvement year-on-year basis of 25%. That's a very good number. So if you look at terms of the physical work program, there has been a substantial increase.
And my last question is, when can we expect closing of acquisition of HPCL? Where does it stand right now?
As of now, I'm not in a position to tell you anything, because now government from their side, they have engaged consultants for valuation and other things. So, but that's what I learned from you people only. Probably this is by this financial year end. Hopefully we should be able to close the deal.
Manisha Gupta is now with us to tell us what's happening in the commodity space. Manisha, over to you. Morning.
Hi, morning, and thank you so much for that. And the crude oil prices continue to buzz. We saw nearly 3% gains overnight in the crude oil prices. This has been the best daily gain in 2 weeks that you have seen. And the crude oil prices now are trading at a one-week high. Where you have seen various statements, events which have been supportive. To start with, OPEC has been making bullish noises about extending output cuts and deepening them as well, taking extraordinary measures perhaps. And then apart from that, you also are waiting for the OPEC monthly report, which releases today. And that actually might be bullish, as markets have been anticipating, and that has been supportive. Nearly 10% of Gulf of Mexico output is shut because of the latest hurricane, and that in turn also has added premium to prices. So we are back at around $50 per barrel when it comes to the U.S. crude oil prices, and markets do expect steady moves from here on. The metal space as well has been supportive, because you have seen a slight decline in the U.S. dollar. So the gold prices are trading at a one-week highs. You have copper prices trading at a 4-week highs as well. Also, the potential shortages in China is something that's keeping all of these metals on the higher side. So starting right from nickel and copper and aluminum, you have seen prices close on the higher side. We did see the iron ore and steel prices start 5% lower yesterday, but they rebounded yesterday, and today we actually have seen some buying come back for this.
All right, Manisha, thanks a lot for that commodities roundup. Let's shift focus back to the equity space, in specific the futures and option space. In yesterday's trading session, the biggest highlight was the fact that the Nifty did hold that 10,000 mark. So that was a positive. Net institutional cash flows were close to around 103 crores. The FII sold 500 crores in the cash market. But in the futures market, the Nifty October futures premium, that one fell from 28 points to about 19 points. In the index futures too, the FIIs, they sold about 400 crores. They unwound some positions, added some short positions as well. And in the index options, they bought about 222 crore rupees, added more puts than calls. But remember, they also added more short puts. On the put side, we had the 10,000 put as well as the 9,900 put that saw a lot of writing. We saw some calls being written. The 9,900 call shed some open interest. The 10,000 call has the maximum open interest. So we'll keep an eye out on those levels. As far as stocks are concerned, just 3 stocks to watch out for. The first one, Infosys, the November futures open interest has surged by nearly 400 crore rupees. And that is because those who are buying in the cash market in hopes of a buyback, they're selling in the November futures to head. A lot of open interest added on both Havels as well as Strides.
Okay, all right, Mangalam. Thanks very much for that. On that note, we're going to wrap up our Power Breakfast. We're going to leave you with the picks of our bullseye contestants. Thanks for watching.
My first stock call for the day will be a buy on Havells, which I'd buy with a stop loss at 525 and a target of 545. My second pick will be a buy on Apollo Hospitals with a stop loss at 1070 and a target of 1115. My third pick will be a buy on NIT Tech, which I'd buy with a stop loss at 598 and a target of 620. And my final pick will be a buy on IGL with a stop loss at 1450 and a target of 1520.
My first buy is on Sterling Technologies for targets of 276, stop loss below 231. My second buy call is on Blue Star for target of 864, stop loss below 789. The third buy call is on Saregama India for target of 618, stop loss below 539. And my last and final call is a buy on Indoco Remedies for target of 263, stop loss below 234.
The first buy recommendation is on Greaves Cotton. One can buy Greaves Cotton for a target of 142.75 with a stop loss of 131.10. The second buy recommendation is on Aditya Birla Fashions, ABFRL. One can buy Aditya Birla Fashions for a target of 173 with a stop loss of 157. The third buy recommendation is on R. Naval. One can buy Reliance Naval for a target of 57.40 with a stop loss of 51.50. And a final buy recommendation is on Sun TV. One can buy Sun TV for a target of 852 with a stop loss of 801.